G'day folks, welcome back to another update for high grade copper, which is consolidating, and US crude, which has hit a support level and bounced. We're going to include some back testing. Also, don't forget to hit that like and subscribe button to support the channel. And also reference the +1 videos for a deeper dive into some of the trading strategies we discuss. And that shows you some of the various indicators and strategies we use. In terms of the outlook, copper is supported by structural demand tied to the energy transition and limited supply growth, suggesting upside potential. Conversely, the US crude oil market is facing weak demand growth alongside rising supply and inventory builds, pointing toward a more bearish or cautious outlook. So first for high grade copper, the weekly is broken above the moving average range and has been so for a couple of weeks now, although there's a fresh breakout on the above the moving averages for the CCI1500 here. That's giving us a bullish momentum on the weekly, which means if you're trading on the daily, we take long trades. On the daily, however, we did have this massive drop back in the start of August, and since then it's been rising slowly above the moving averages at that point there. Now as well, look for any divergence, and basically no divergence, but where we are at the moment, bullish momentum with the price and the CCI above the moving averages, and that's a fresh breakout as well. So what that means is if you're trading on the 1 hour time period, you go in the direction of the daily. Here on the 1 hour period, again, first of all, back here before our last video, we projected this bearish divergence and had a target range there, hit that target, and it dropped off slightly. That's, by the way, I'll just redraw that target range for those new to the channel. We take it back to that significant low before that divergence started, and why is it there? And that would have been actually, no, it would have been here actually. Would have been at that level there, and that was at 23-38% range, which also coincided with this support resistance line here, which is where it's been fluctuating and currently above. So at the moment, the hourly is pretty much consolidating, although if you zoom in, you can see there the price is broken into the moving average range and the CCI is broken below, so somewhat bearish to neutral at the moment on the 1 hour time period. Now if we go to the back test, again we always go in the direction of the daily. If you're trading on the hourly, we go in the direction of the daily. So here we go long when the price breaks above the moving average, and so does the CCI. That's where you start trading long on the 1 hour time period. And what you do on the 1 hour time period, the strategy I'm using here is let the moving averages here rise, you go long, and whenever you see the moving averages turn down, if you're in profit, you take your profits off the table. So going long, take your profits off the table, going long, etc. Also pay attention if it drops significantly and it rises, but then it doesn't actually rise enough to close out, then you average down. Now, in terms of closing out your trades and avoiding these such drawdowns, what we do is you watch the bearish momentum on the CCI versus higher highs on the price, and eventually that breaks to the downside. That's what it did there, and you may have been holding on to a couple of contracts there, but you should have avoided that drawdown if you played your trade right. Now since then the price has dropped off, averaged down a couple of times, and you should have been going long only according to the daily trend during that period. At this point here, you probably should not be going trading at the moment at that point until it gets to this level here when the CCI breaks above the moving average band and sells the price. And that's where you can start taking long trades the last couple of days of trade during that period there on the 1 hour time period. So for US crude, this has been bearish now for a number of weeks. You can see there it's below the moving average of the price chart, and the CCI is already broken to the downside. So that's bearish momentum on the weekly. On the daily, again, it's been consolidating there for a number of days, a few weeks actually, and it finally broke down and it's bounced up into that moving average range. At the moment, the daily is showing bullish, somewhat slightly bullish momentum with the CCI above the moving averages, and so is the price. But just be wary, we might see further downside at the moment. So that's why we always look at the lower time frame as well. And there was no divergence to worry about during this period on the daily. On the 1 hour time period, again, we did have this bullish divergence we drew on our last video. We projected a target range there. Now, since our last video, the CCI has dropped slightly to those lows there, double bottom there, and the price chart has also dropped, and I'll take it down to that level, which means we'd have to then recalibrate the Fibonacci retracement, and that would have been drawn back to, I think, back to that level when I first drew it. And that means that gets repositioned at that point. You can see there it bounced and broke through the 23.38%. That's a minimum retrace we can expect on, in this case, a bullish divergence. Sometimes it just touches that range and bounces back down. Other times it breaks right through, and that's what it's done this time. But even if we extended this Fibonacci to that level, you can see there it's still also, let me just realign that one. It's also penetrated that 23.38% range, and it's currently bounced off near that 61% Fibonacci retrace. So at the moment, looks like it's going to heading towards a more bearish outlook on the hourly, and what that means is, if you're looking at the daily chart, again you're trading on the hourly in the direction of the daily, so don't go short at this point until you see the price and the CCI break to the downside on the daily as well. Looking at the back test, according to the daily, you would have gone short during this period. Probably avoid trading some of those long periods because you can see the consolidation there. I'd like to see the moving average range widen like it has here on the price chart, and that's where you would have gone short during these periods. Now again, paying attention to any bullish divergence in this case, you can see a bullish divergence there with the CCI higher lows versus, in this case, a double bottom there, and closing out your trades whenever you see a bullish divergence. That wasn't a divergence. I've got to be really obvious when you zoom out at this level. Back there, you can see there a somewhat bearish divergence, and as we said on the hourly, there's a bullish divergence there and broke up. But so far, that would have given you some nice returns if you let it draw down a few and average down a few times as well. If you want to get some insights into some share trading ideas, want to subscribe to the Patreon page. We do a weekly bullish share scan, and this is what we've traded so far since around about the 21st of September this year. Just over a month of trading, generating at Aussie dollars 3,600, and in terms of percentage return in a month, we've returned 9.65% so far. And again, that's very minimal trades we've taken on these companies. So again, reference to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.